Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 13th of November 2016, and we're briefly addressing the issue of how gold could fall below $1,200 within the next 6 weeks. Last week, gold prices plunged to their lowest level since week ending the 3rd of June, in reaction to a surge in US bond yields, on speculation that President-elect Trump's economic plans could stoke the flames of inflation. December Comex Gold futures closed the week down over 6%. There have been numerous reports from Reuters and other agencies suggesting that in order to gain the jobs Trump has promised and to fulfill his election promises, considerable infrastructure and public expenditure is required. Coupled with reducing the legislative burden on businesses, including banks, we may indeed see a rapid rise in both inflation and interest rates. Some analysts argue quite cogently that since Trump's victory, the markets have been going through a considerable reallocation, with stocks and the US dollar rising and Treasury bonds and gold prices falling. The key here is to understand the impact of US Treasury Yields and how they are probably one of the best indicators of the direction of gold prices. As gold doesn't pay an yield or a dividend, rising yields and equity prices put pressure on the precious metal. Gold competes for the same investment dollar, and investors want to get the best return for that dollar. The cash bond market is saying that inflation is coming and that rates will have to rise. Even you, our subscribers, have repeated on numerous occasions how you are witnessing rising prices in your local stores. The Fed has to make the decision whether to speculate on future inflation issues or stick with what is actually happening in the economy at this time. Despite this, most economists agree that the Fed will raise rates by 0.25% in December. The next 6 weeks' direction in gold will be determined by the direction of US Treasury Yields and the US stock market. If stocks and yields continue to rise, then gold could very likely break below the 1,200 level, perhaps as low as 1180. If this were to happen, with silver prices generally correlating to gold on the approximate basis of 70 to 1, we could also see silver fall into the mid to late $16 level. At this stage, we look back at our predictions video of the 24th of February of this year, where we forecast that the gold price would move between $1,100 and $1,350, and silver between $13 and $17.50. We did change this a little more to the upside post-Brexit, and we did indeed see gold peak at $13.70 and silver peaked at $20.72. But interestingly, it appears at least that gold and silver are likely to end the year within the scale we set back in February. If it does, even allowing for political issues, it suggests to us that our analysis, which is heavily geared towards fundamentals, is quite reasonably accurate, and that all the fear the pumpers engulf us with, suggesting gold is on the cusp of rising to $5,000 an ounce and silver to $200, is just nonsense, and that we are content to be just $1 or $2 wide of the mark, as opposed to hundreds or thousands of dollars, as they, yet again, for another year, would clearly have been. However, we accept. We may have to eat our words, as there are still 6 or 7 weeks to go before the end of the year. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.